Good morning everybody, it's Chris from Serene Education with the 4 major notes update for the 15th of August 2012. Hi guys, just have a look at the 4 majors, starting with Euro against US dollar on my long-term template here, using the count the cash system, the CTC strategy template. Let's have a look at the daily and see what happened yesterday. Uncertainty yet again in the market yesterday. Price rallied above that 123500, but was unable to actually hold on to those highs and find support above that 1235 going into the US session. And subsequently price fell below again. A lot of indecision, you can see a lot of indecision here, a lot of wick, and price, the actual body is very small, spinning top, followed by two, well, all of them are spinning tops, some of them are just the wicks are the ones that are the undoing of it. You can see the CTC on the other side is still very much negative, and that major support and resistance level still above price. So yesterday's candle rallying above that 123500, but however failing to actually capitalize once it was above it, and the 50 period moving average in this case on the daily pushing her lower and trading back towards the 20 period moving average. If you look at the 4-hour chart, for example, you can see at 123500 I put my major support and resistance levels, and you can quite clearly see that yesterday's candle at roughly 10 a.m. in the morning broke higher than 123500. Not a very convincing candle, pulling back at the end of that trading, that 4-hour trading candle. However, the next 4 hours after that, leading into the US Open, saw price pulling back quite sharply. Bearish engulfing candle saw price moving back below the 123500. So that breakout, we're looking for a pullback, and that pullback should have maintained above 123500. So we could actually see price capitalizing and pushing higher. That failed to materialize because the next 4 hours were really negative, and we saw price pulling back sharply below that 123500 mark, and subsequently still below it, and hence the reason why the CTC on the other side is still looking negative. So as it stands at the moment now, intermediate trend intraday, you can see that the institution moving average still governs price, so we're still positive even though we're on the underside of a major support and resistance level on our 4-hour, and the same can be said about the hourly chart. Notice at 123500 I'm always plotting my major support and resistance levels. You can see price yesterday in particular edging higher, okay, breaking, a lot of indecision. Then we had a decision candle here, not a very convincing one. We want to see a one with very little wick at the upside of a major support and resistance level, telling us that sentiment is generally looking positive upside. That failed to materialize. We saw the pullback. So we had the breakout, the pullback, and we're expecting a pullback and a consolidation here above 1235. However, that hour there at 2 o'clock just took it all away, closing lower than the 123500 and subsequently moved back lower, and doing so trading below all the moving averages. Asian session, you can see quite flat, not much happening over the Asian session last night, and a lot of indecision on this time frame. Quite clearly see forging a support through the Asian session going into this to the European Open this morning. The RSI on the 50% line not really giving us any indication where it's likely to go, but you can see all the moving averages above price. So this could be either the undoing of price, as we could see potential for price to move lower now, but we need a break below that 1231.50 mark. Get a break below 1231.50, then we should be targeting those levels back down towards the 12225 intraday. On to sterling. Let's have a look and see what's been happening in this pair. Let's look at the daily. Here again, we are very well aware that 157500 is a major support and resistance level for this pair on the daily. You can quite clearly see a huge resistance level above at this level here at 157500. It coincides quite nicely with that institution moving average, the green line that disappears behind this black line for a while, but you can see the institution moving average above price, and in doing so capping price moving any higher, and subsequently this being a major resistance level. So as price heads into this area here, I can assure you that all the traders out there that are trading this are well aware that if they are in this to the upside, they'll be taking profit now, or holding on to their positions, capping up or moving their stops, etc. And you can quite clearly see the candlesticks, how they get small, indecisive as we head into this range of here. For example, prior days ago, you can see Tuesday's candle almost like a shooting star formation at the resistance, and another shooting star yesterday. So if price cannot hold on to this upside over here above the 156600 mark, and we get a bearish candle closing lower than that, then it's clearly telling us this over here is negative, the end of an upside trend, and we should be looking for potentially bearish sentiment to follow. The only thing that's going to actually cancel these two candles out of here is a positive upside candle cancelling it. Otherwise, this is clearly showing us we should be looking for potential selling or shorting opportunities. So get a close below 1566 on our hourly chart preferably, and you should see price reverting to the downside. Likely targets could be the 20 period moving average, or ultimately the 1560 here, or back down towards this major one over here down at 15500 for the foreseeable future. So intraday, what we're looking for is 1566. There you go. You can quite clearly see 1566. You can see prices trading above that Fibonacci extension level, or sorry, retracement level here at the 32 point. Apologies. The 60. Oh, I've gone blank here. Sorry, apologies, guys. This is the 38.2. Apologies. Okay, so on our 4-hour chart, the 38.2 is the 1566 mark. Get a break and close low, and that you can see there's a lot of indecision here, a lot of wicks. Okay, at the underside of a major resistance level, so it's telling us that price is starting to slow down now. You can see the highs here, very much moving into those highs, and you can see price is starting to stall. Is probably the word I could probably use best at that level as we head into this major resistance level. And you can see once we head into it, we've had major pullback. So expect a major pullback, but that'll only come if we get a nice break and close lower than 1566. Nice bearish engulfing candle here with very little wick and more confirmation downside. There's something along this lines over here, for example. Something not very indecisive. I mean, this is still bearish, but it's very indecisive. But we do need something with a bit of decision. Break below 1566 would definitely confirm downside movement. Moving back towards this 15600 mark, the institution moving average, ultimately back down towards this 1555, 1551 mark intraday. On to US dollar Swiss franc. Let's have a look at this on the daily. Okay, price failing to break above the 1000 mark, which is a major support and resistance level in the past. Price heading into that bearish engulfing at a resistance level, so price reverting to the downside and back towards a target level of the previous support and resistance, or the major support and resistance level here at 970 on the daily. Since then, bouncing high again and then bearish engulfing back towards this level, so you can show you that the long-term target is still looking negative, but the intermediate trend is starting to look a bit bearish. You can see price not bouncing as high after the previous support was found. Indecision at a 50% projection level. We had a shooting star here and then a bearish engulfing, and price reverted back towards its 970 in the past couple of days. However, still finding support at that 970, and as long as it finds support above 970, then we could see price finding momentum to potentially bounce higher. Ideally, we'd like to see it close above 50% line here at the 970 or 980 would be far better. Get above that, then we could see price reverting back towards a 61.8 for retracement area here at the previous resistance and support level here at 987. Back above that, then we can definitely see price moving higher. Long-term trend line has been breached though. If you take the big scheme of things, you get the trend line from here, from those lows we saw in August of last year, and you can see price moving higher. We have had a break of this upside trend. However, the only thing that's actually supporting this still to the upside is this major support and resistance level here at 970. Get below that, subsequently then we can start seeing a new trend to the downside with potential targets being the 960 here to start with, ultimately back down towards the 940 on our daily, which is going to bring us back towards that institution moving average. Price is still being is supported by the institution moving average on our daily, so sentiment you can quite clearly see is still positive across the board. However, if we get a break below that 970, then we're going to start potentially seeing a lot of negativity starting to unfold for this pair. 4-hour chart, you can quite clearly see that intermediate trend moving lower, swing lows dictating downside movement from the highs over here at this major support and resistance level at the top here. However, you can still see price is capped at 970, guys. Very, very important. A lot of consolidation here, 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 here. Noticeable consolidation. This is where you put your major support and resistance levels. This being one of them. So if we get up, you can see the institution moving above price on our 4-hour. So that's a negative signal. Okay, the only thing that's actually not helping that, not stopping this from falling any further is that major support and resistance level at 970. Get below that, it'll be trading below all its moving averages, and we expect to see the CTC go red. And ultimately, if we do get that with a nice bearish engulfing candle break below this 970, ultimately our target should be, or would be, a 960 below, and then back down towards a 940 here. Last pair of the day is US dollar Japanese yen. Let's have a look at the daily on this particular pair. A nice bullish engulfing candle yesterday. I did mention the longer we spent going forward, or was sideways at a support here at 78, we would see price actually building momentum to the upside, and showing up yesterday the candle punching higher than this 78.50 here, which for some time was a major resistance level for this pair on our daily time frames. A lot of resistance through the prior week, not really moving once it had broken above that to the upside, and yesterday's candle really punching higher after a noticeable spinning top the day before. So spinning top, we don't trade in spinning top, which is an indecision candle, one decision. Yesterday's candle was a decisive candle, and sure enough, you can see on the Asian session last night, going through European session, prices moved higher towards that level here at the 7900 mark, back up towards the 7920, which is going to be our next potential target. Both the 50 period and the institution moving up above price at this level. Break above that would see price reverting and reattempting those highs here with a major support and resistance level at 80 guaranteed. So as it stands at the moment now, price heading towards that target here, the February tracement area at 23.6, which stands very clearly out at the 79, between the 7900 and 7920 mark. A lot of resistance here above price. Just be aware of that. And you can see the downside trend, the major trend, clearly being breached. If you think about it, on this time frame on the daily, you can see, if I just draw a nice trend line from the highs we saw here back in March of this year at 8400, you can see price resistance, 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 breakout. So now it's got to stay above here, break above that 7920, and then we should see price running towards that 80 mark quite soon. So intraday, got to be aware of it. 4 hour, look at that, breaking above the institution moving average over the past 16 hours or so, and now it's finding support above this above that institution moving average. Before, price being governed by the institution because it was trading below it, and sure enough, the sentiment was negative, so we should have been looking for selling opportunities. But as we head into this major support and resistance level at 78, then we've seen consolidation on this pair, and you can quite clearly see that price is trading at almost like a little consolidation pattern, a little just moving backwards and forwards between 2 points in a channel, and you can see that the institution moving average being broken just recently, and that channel up, down, up, down, up, down. As long as it can break above this, the top side of this channel here, and stay above the institution moving average, then we should see price making its way back up towards those areas I mentioned on our previous one, roughly around the 7920 first target, and then ultimately back up towards 80, which is our long-term major support and resistance level above us here. You can see quite clearly there has been a lot of consolidation at this area here. Get above 80, then we're talking for long-term upside movement for the foreseeable future. But as it stands intraday, you can see what's happening at the moment now is it's trading at the underside of this channel. Got to get above it, break, close, the last 4 hour close above this 78, what's that, 78.85 mark would be great. And they've just confirmed that the intraday support is definitely in favor. And on our hourly entry, this is my entry candle, you can quite clearly see that everything is blue on this time frame. I have my blue arrow, blue candle, and the CTC is very blue, and all the moving averages below price. So that sentiment is starting to build now at this level at 78, and you can see that the lows were getting higher, which shows you that momentum is still working favor to the upside. And now we want to see a break of the 78.85 mark, which did clearly look for further upside movement for the foreseeable future. So if you're looking for trades, have a look and just keep an eye out on the US dollar Japanese yen. It seems to be moving a lot better than most of the other major pairs. That's it, guys. That's it for today. Hope you have a fantastic trading day. Please be aware of any news announcements that's going to move the market. We do have bank holiday in Europe today for the Spanish, the Italian, and the French countries. So not a lot of liquidity in Europe primarily. So just be aware of it, and then have a look and see if there's any other news announcements that could very potentially move the market today. We have unemployment rates for GDP for sterling, and then we have, what do we have? Claremont count change. It's another big one. Then this afternoon, going into the US session, we have core CPI month-to-month figures. We have the Empire State Manufacturing Index, quite an important one. Then moving into industrial production month-to-month, and crude oil inventories, which is another one. It shows us how much companies are holding onto crude oil, which will dictate what's it like if we see a contraction or expansion in the productivity side. So that's also going to be quite important for us. So be aware of all these news announcements, because it all does factor into price action. Otherwise, have a fantastic day, and I'll see you first thing tomorrow morning. Until then, trade serenely.